Well, I think it just goes
reconcile that?
it goes back to whether what is your goal? What is your mandate? Is your mandate to meet or beat a benchmark or an index in any given period? Is your goal that you've been told explicitly by your partners, I manage my own cash, I don't want you managing it, I want it fully invested at all times? Or are you taking a more opportunistic approach to it and taking an absolute mindset to it? And then again, it's just like the various comments I've made about other investment frameworks, whether it's venture capital or holding gold or whatever. There are multiple ways to skin the cat here. You can be fully invested and be a great investor. I would make very sure that you have the liability structure and the temperament to survive the inevitable drawdowns, because if you're fully invested and the market gets cheaper and you've got all these great opportunities to look at, you are going to, by definition, have to sell something to buy something else cheaper, which is hard. It's harder to do that than to just have cash ready to go, but it's very doable. There are other folks like Seth Klarman who've carried average 30% cash balances for a decade or 2 decades running. That's the other end of the spectrum. Charlie Munger likes to say, sit, do nothing, hold cash, and wait. So certainly those are all Hall of Fame investors that have their own way of doing it, and they've set up ways that are completely rational to responding to both sides of their business. What are the assets that I'm buying? How am I funding them on the liability side? What's my time horizon? What do my partners want and need? And that's really what you have to decide.